Ladies and gentlemen, welcome to today's video. My name is Kevin and you're watching Cryptos. That's just my nickname here on YouTube. And just a video, a topic on the 5 different tech stocks that I personally think are undervalued right now. I know, and you probably know, that we are currently in a falling knife, if you will, of a market. And I think before I say anything in this video, I need to say that all investments, if you decide to invest after my tips on the 5 most anticipated stocks in the tech field that are most likely going to give you a great return, at the same time I say that you're responsible for what purchases you make, and I'm not reliable for anything there. So now, when we have that out of the way, I would just like to welcome you to today's video. We're going to talk about, like I said in the beginning, the 5 top tech stocks that you could buy right now. And the reason why we're going to do this video is because you know that the coronavirus, the COVID-19, has created a turmoil or a chaos situation on the stock market, which has created a lot of let's see here, I'm just gonna position my mic in a different position, which has created a lot of fear. And as you know, if you're an investor, if you understand the markets, I would just like to, before I say that, I would just like to ask you to go watch my previous video that I made a couple months ago before the corona outbreak, where I personally said that 2020 is most likely going to be the year when the market crashes. We've been waiting 12 years now, since 2008, and something has to happen to the market. It's too overvalued, and we don't know the actual value of the market. So lo and behold, what happened? Well, as all professional investors know, the market is driven by emotions. And it's very predictable if you think outside the box and if you think before a big event happens like this. And I'm specifically talking about before this market crash, before coronavirus, and before. When I say the market is driven by emotions, think about it. After 2008, when people saw a market opportunity, they purchased, maybe put in a whole lot of money, because you got a whole lot of money, a whole lot of stock for your buck back then, right after the crash, right? Which makes sense. And so a lot of people have been waiting now for years and years. Long-term investors that have put in, hedge funds. We're talking financial institutions that have invested in long-term in big companies, right? That are now seeing, or wait, I can explain it like this. After a whole lot of years and you've been waiting, and we're talking 10, 100 folds of your money has gone up. What happens then once a little bit of fear comes in? Oh, big headline news. Coronavirus could do this to the tech companies, or could do that to the economy. These people that have been invested for such a long time, they start removing their entries, removing their positions, if you will, and getting out. Now, what happens when you do that is price drops, right? I mean, it's simple, supply and demand, right? So we're seeing people get scared during this and taking out their money, because most likely they've been in for a long time, and they're starting to see now that, hey, I have made too much money to be able to lose it right now. And at the same time as this is happening, you have professional traders that see a potential in the bear market. So what they start doing is that they start going short on the market, which puts a even heavier pressure on people that are invested long. And that creates even more fear and more fear. And so the market keeps going down, down, and down. Now, I'm not trying to explain this. If you're a professional out there and you're watching this, I'm not trying to, explain. I mean, you get what I mean. I'm not trying to insult anybody. I'm just trying to explain how a bear market starts, or a crash starts, right? I mean, 2008 market was the housing market, right? And now we're seeing that stocks are way too overpriced, and There's a lot of fear in the market. Now, are we going to come into a recession? We don't know. We can't say that. And by the way, nobody knows where the stocks are going to go. But what we can do is we can make an educated guess and see what's going to be the most likely thing to happen to these stocks. So now when the intro, the freaking long intro is over, we're going to dive into the first stock right here. And the first stock is none other than Apple. First of all, actually, you know what? We can go through all 5 of these stocks. I wrote them down right here. It's Google, Facebook, Amazon, Tesla. So Apple, right? It's $242 right now. And some people might be like, what? That's a lot of money. Yeah. If you don't want to buy pure stocks, you can go and buy CFDs if you want, if you don't have that money. So let's just check here what's been going on the last couple of years, right? So we've been seeing a huge price movement up ever since 2008, right? I mean, that's what I'm talking about. People are invested from here, right? There's a dip, and you buy up. Great market, right? We're in 2020. It's priced way too high, right? We don't know what the actual value is. So what's going to happen right now is people are exiting their positions that they got into around here, on these different pullbacks, right? And so they're exiting right here. And now what could happen? Let's say coronavirus ends right now, and there's not a huge, global crisis in the economy. I mean, this could just be another pullback, right? And we could keep on going up. Option number 2 is that it keeps going down. It's going to continue going down is what I think. And the reason I think so is because I don't think the coronavirus is over, but I don't know. Nobody knows, right? If anybody tells you that they know where the stock market's going to go, they're lying to you. So we see a great buying opportunity here during this economical crash, if you will. And some people, they're just getting in, maybe somebody's getting in there. They're getting in at some cheaper alternatives, right, during this sell-off. So we can see that it was valued up at $315. It's currently at $242. I mean, we're talking almost $100 difference, right? And yeah, that's one option that I think. And here's the thing: why am I taking 5 of the most anticipated stocks? The reason is because you should never invest into just one. You should never put all your money. I mean, this is investing 101, right? I mean, okay, the first thing is supply and demand that you learn, and then you learn don't ever just buy one stock. The reason why we're having this is so that you can buy, or you can make sure that you have a diversification, if you will. You can diversify your portfolio and have several stocks in one bucket, so that whether one stock's continues going down, you might have the others that are going up. Now, do I think you should buy these stocks now? No. I would probably wait to see kind of what's happening. You're starting to see big companies make big decisions right now due to the coronavirus, and we're starting to see a huge economic effect. I mean, you can just check the oil market that I'm going to make another video about later on. And yeah, I don't think we're done quite yet with a bear market, but this is one of those stocks that I think you should be keeping a lookout on, if you will, once you're ready to buy for the next bull market, right? I mean, we could start seeing levels like 105, we never know, right? Anyways, Apple, that was Apple, right? Let's go into Tesla. Remember, we saw a huge increase in Tesla just previously. But what are we seeing now? Let's go in on the technical chart. I'm just using investing.com right now because I think it's the easiest to use, right? Oh yeah, I could have done this from first go, right? I mean, look what's happening to Tesla, bro. Okay, I'm gonna do it some justice and give it a proper chart here. Should have done this on the other one as well. Man, this hurts just to look at, right? Look at that, bro. Look at it. Won't you look at it? I mean, some people would probably say that they're waiting for an area of support around here, right? 371. I mean, it was up. Dang, that's so crazy. 972, almost $1,000, and it's already down below one third of that now, right? I mean, it's heading towards the 300. So, I mean, we're seeing a huge decrease in their stock. And I mean, the other reason why these are the companies that you should be looking at, and the reason why we're taking out the five biggest tech companies, you probably have someone else that you think is going to go up right after this. And yeah, you're probably right? But what are the five most likely stocks to go up? Please, comment down below what you think. But you're gonna the reason why we want to invest in the big companies is because we know they're not going to go bankrupt, and we know that the market always continues up. I mean, this is how a market moves. It goes up, it needs to correct itself, see what's happening, a crash, right? All right, well, now we know where the value's at, right? But might go like this for a couple of years, and then it might go up like we've been seeing now, up, 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 up. Now we need to see it go down now to kind of find its value before it continues to go up again, right? I mean, that's how markets always work. And sorry for my poor drawing, but what we want to do is that we never want to enter a market up here when it's at its high, right? Which it's been, right? I mean, you see it up here almost $1,000 per stock, right? This super bull trend for the past 12 years, So what we're seeing now is we're seeing this retracement back, right? This pullback, if you will. And once it's ready to keep going, I mean, you can enter positions, throughout this way down, because you're never going to know when it starts going up, right? And look at the people that bought over here, right? They're like, oh, no, it's going back to zero. No, 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 no. It's just finding its value again. So they bought here, right? And now look where the market's been, and now they can sell off, and bears coming into the market. So putting some pressure on the buyers. So it's going really low. And what levels will we see? We don't know. But once again, think about buying more than just one. And these companies, we know that they're going to come back on track once the economical crash is over. Let's go Amazon. Amazon, same thing. I mean, Amazon, we all know Amazon's going to take over the world, right? And remember, guys, if you cannot afford to buy simple stocks, I mean, look at the price of an Amazon stock. Then remember, you can buy CFDs, which means that you're buying contracts pretty much. You can go and read about it later. But Amazon, we were valued up towards $2,000 per share. We're already down to 1.689. We know that this is a stable company, so we would like to buy when it's cheap, right? It was a while ago since I used this. But no, I wouldn't draw it there. I would probably draw it around there. Yeah. I mean, this is kind of the lowest support level where we would be wanting to see it go towards, right? No, we're on the monthly chart, yeah. So I would probably not buy now. I mean, of course you could, depending on where we're at. But this is another stock that I would definitely add into the bullish portfolio once you're ready to invest, right? So we're looking for an area around 1.4, I would say, depending on how big the crash will be, right? And the reason why we're buying, once again, is because we want to position ourselves for the next bull market. But this bearish market could be going on for a while. So there's this one saying, and the reason why I said a falling knife in the beginning was because this market, if you buy it now, you could be seeing red for some time. You never want to catch a falling knife. So once we start seeing traction towards the upside, and positive media coverage and an overall positive consensus, then we know that it could be time to start getting back into our investments. Facebook, and then we're going to check Google. So we got Facebook, right? Facebook is one of those companies that I'm starting to lose a little bit of faith and trust, but they have so much capital. They're such a trustworthy company, and they always, Mark Zuckerberg always makes sure, or he's always like innovative, if you can say that. He always makes sure to be ahead of the curve. And I mean, look at Facebook, look at WhatsApp, look at all these different apps, and their Libra coin that they're dropping out now in 2020. Look at this, it's beautiful. I mean, we're talking same thing here. We're looking at these levels around 130, 114, right? We were previously valued up at approximately 220. I wouldn't say that since it push itself right down there. I would say 206 approximately. So it would look, I mean, a good buying position would be around there, right? I mean, boop. Buy there, right? Here's a good position to buy because, like we said, this is a strong company. We're most likely not going to see it go way too much down because they will start getting back into profits as soon as this virus is over. Most likely things can change, right? So anything can happen. Last but definitely not least, the big tech giant that owns us all. Now they got different classes, right? But let's take class A in their stock. Oh, we're seeing a big hit, boys. Now look at that. Look at this drop, guys. I mean, we're definitely, I mean, is this a market crash or what? Is this a market crash or what, guys? Valued up at 1,453. We're down $400 just now. Crazy, right? Look at that. And imagine when it keeps going up, right? Let's say it goes down to 900, 9,800. And once it comes up here again, just the previous highs, you've already doubled your money almost. And then we're going to see another, I mean, this is what we hope, another strong trend going upwards. I mean, Google, we know that Google's going to outrun this economical crisis. And that's the thing. You always want to invest into companies that are strong when it's a financial crisis. Guys, thanks for watching this top 5 stocks to invest into, or tech stocks to invest into that are most likely going to be bullish after this crisis, where you want to place your money for a long-term investment because you know that these companies are stable. Thanks for watching. My name's Kevin, aka Crypto, and I'll continue to post a couple of these coronavirus stock updates. And yeah, don't forget to hit that subscribe button if you've made it all the way to the end. And I'm not begging you, I'm just asking if you want to join the community. Hit that like button, hit that notification, and yeah, let me know what you think. I mean, everybody is a stock pro, right? Nobody's right. Everybody's just speculating. So write what you think. I would appreciate it. I want to hear your thoughts. And yeah, take care. Bye.